And what I realized in looking back on flipping, right? You can get rich flipping, but you're going to get wealthy holding assets and playing the long game. And when I watch all these transactions that we bought, we remodeled, we sold, we're working on 10, 15% margins, pretty standard for the industry with a high volume. So we did very, very well. But I'm looking back and hindsight's, more clear in 2020. You can realize, oh wow, look at these assets appreciate. I sold that 65 for 99.9, and 3 years later that was a 200. I'm like, what if I would have just rented this for 1,000 a month? I would have gotten good cash flow, one, and two, look at all that appreciation.
Welcome to the Infinite Financial Freedom Podcast, and my friend Zak Kepes. Welcome to the show, brother. Glad you're here.
Glad to be here. Appreciate it.
We were just talking about what you see is what you get, authenticity, and Zach and I were just BSing about our workout schedule this morning. Let's start there because I think that's an interesting dichotomy. I'm an in bed at 8 p.m. guy and up at 4 a.m. guy. You go to bed about the time I wake up.
Pretty close within a few hours. I'm literally in bed at between 12 and 2 every night.
Wow. And your genius zone, like where you do your best work, seems to be in those late hours, or what are you doing at that time?
It's interesting. I like, when there's solitude and peace and no distraction is the best time to underwrite deals because again, you're not ordering a pizza or a hamburger, you're not at the Cheesecake Factory just, analyzing all this stuff. At night, when you're spending hundreds of thousands, millions of dollars on something, you want to be focused and clear-minded and uninterrupted. So you're making big decisions. You want to be extremely focused. To me, that's a great opportunity. People are sending me deals all day. I tell them, here's my time. You're going to hear back from me tonight or early in the morning, whether I'm interested or not. Yes, I can pay your price. No, I can't. And or here is my offer based on, my underwriting.
I love it. I love it. All right, guys, let me give you a little background on Zach, and then I want to go back into what we just started with. Zach and I met at a event called Immersion that Jesse Ray put on. Jesse's been on our previous podcasts here, and Zach has an amazing story. He's based out of Arizona. The guy has a portfolio of over 300 single-family rental properties. He's completed over 4,000 transactions in his life. I think this is I think he started in 2002. Is that right, Zach?
You just run the whole, just speak for me. You got it down. Yeah, it came out in 2002, 23 years in the business. Yep.
Amazing success. And a couple of things I found interesting about Zach. Number one, he is just what you see is what you get, no ego. And somebody with his kind of success, I find in many cases carries ego. This guy is just salt of the earth, amazing human. That was the first impression that I got for you. And then the other thing that blew me away about you, Zach, was you run this whole operation in a different way. Like most people who have 300 properties have 15 partners and a staff of 20 people and $1 million marketing budgets. Like you run this operation, I know that you have a team, but you run this operation, you're in every nook and cranny and you actually do the work, man. And so that was also really interesting to me. So let's just jump in. Like you started in 2002 in Arizona, you got there with $30,000. How the hell did you get to 300 units? What was that path like for you?
Well, it's a long time. Hopefully we got, a couple days for this podcast, but no, I'm kidding. Came out in 2002, didn't know really anybody out here, had some family connections and whatnot. Stayed in my parents' second home, got my real estate license in 9 days. So the first step was getting a license, getting the lay of the land, getting out in the field. The money's made, not behind the desk, but, belly to belly, meeting people, understanding, the investments and the niche, and really just infiltrating on a high level. And that's what I did. I went out in the field, was driving, looking and analyzing deals, and bought the first deal literally within the first month or two. I was blessed because I had capital behind me. I had cousins in the Midwest that had a big shop, and I was the human capital out here. But basically, it was trial and error. Prices were pretty low back in the day. So the first deal was $65,000, I believe, on Rozier. Sold it for $99,900. We're not talking major margins, but we're just getting, reps in, if you will, with a low barrier of entry. So came out, just started, learning the business, meeting people, building the crews, and that's how I pretty much got started. One home at a time, and then we started advertising. We had a company called 1-800-NO-AGENT So we were spending $65,000 a month, $70,000 on TV, billboards, radio. And I was the one going out, taking the calls, going to the appointments, meeting the homeowners. And that was a blast, right? Like I love hearing people's stories, being consultative. I'm a relationship guy. I'm a Midwest guy. I'm a, belly to belly, the same way I run my business today. I walk around with a checkbook, a pen, a pad, listen to somebody. And before I talk, I listen. I want to know, what is your problem? How can I solve it? What's the best solution for you? And it's the same mentality today when I'm dealing and interfacing with tenants or anybody. Talk to me, be level-headed, calm, collective, and be solution orientated. I mean, that's the name of this business. And so we started the first year, I think we did 60 houses, then 100, 150, and then we're doing 200 a year till our market basically imploded in 2007, 2008. And during those times, we did, probably 1,000 transactions. And I was buying pretty much every one of the homes, meeting the sellers, managing the crews. I mean, it was wild and it was a lot of
Wow.
fun and getting those incoming hot calls. And I'll be right there. And, time kills all deals. So there's nothing like you got a seller that's motivated on the phone. It's like, so let me just get this straight, Mr. or Mrs. Seller. This is what you're looking for. This is what you need. If I can come out in the next hour, are you ready to sign a contract? And they're like, well, no, we want to get 20 offers. I said, great, go get the 20 offers and call me because I will always pay more because we are vertically integrated. All these other people are wholesalers or they're agents buying for a listing versus me. I'm talking with my checkbook. When I come out, I'm going to give you a $20,000 non-refundable check and I'm closing. It's not assignable. We're going to digest this deal. I'm for real. Nobody will pay more because we can afford to pay the most. And they're like, you can come out now. I'm ready to sign. So I'd show up, I'd be in and out in 20 minutes with the contract. Thank you so much. And go on. And it was a wild time. And what I realized in looking back on flipping, right? You can get rich flipping, but you're going to get wealthy holding assets and playing the long game. And when I watch all these transactions that we bought, we remodeled, we sold, we're working on 10, 15% margins, pretty standard for the industry with a high volume. So we did very, very well. But I'm looking back and hindsight's, more clear in 2020. You can realize, oh wow, look at these assets appreciate. I sold that 65 for 99.9 and 3 years later that was 200. I'm like, what if I would have just rented this for 1,000 a month? I would have gotten good cash flow, one, and two, look at all that appreciation. So my mindset shifted in terms of retention and playing the long game versus that quick booger sugar, we call the cocaine mentality. Give me that quick high, give me that quick, cash versus let's delay things. Let's really build generational wealth, slow it down, and because Arizona specifically, so it's to be clear to your listeners, I only buy in Arizona. Other markets, they're not going to see maybe as much appreciation because there's not an influx of people moving here. So when you're looking at the macroeconomics, Arizona just works well for, in my opinion, long-term appreciation. All markets right now are having a tough time with interest rates and political stuff and unknowns in the market, all these intervening variables. But I'm playing the long game. I'm not worrying about these, intraday trade differentials. I care about what does this market look like in 5 years from now, in 10 years from now? Where will rental rates be? What's going on with inflation? I want to be in hard assets. So again, I shifted the model to retaining these deals versus flipping for the most part. All the money I made flipping, I now went to buy single family homes that were I paid cash for them. They weren't that expensive. And then finally, no banks were lending during the hard times. And after we came out of that, all of a sudden real estate becomes sexy again to banks. And they said, hey, Zach, I hear you own some unencumbered homes. Would you like a line of credit? And I was like, where have you been for 5 years? Hello. And so from there, I grew and scaled this business. People say, well, how do you get to 300 and some homes? Like, that's impossible. The reality is this, to simplify for people, one home, one relationship, one brick at a time. This is all I've done. I've stayed the course. I don't get distracted by all these fancy material things or fancy cars or trying to get in commercial and multifamily and all this other stuff. And I'm curious because we had a brief conversation where you sold your single family portfolio and went into commercial. I'd love to finish that conversation because I'm gung ho on obviously single family homes. That's my bread and butter. But of course, any business works as long as you work that business. You can make money doing anything. So I've just stayed the course, become an expert for single family homes, specifically 3 bed, 2 bath, 2 car garage, if you will, in Arizona. That is my niche. I'm the guy out here for that. Someone calls me on a deal elsewhere, no clue. I have to call somebody to get, some advice.
This is the easiest way for self-employed business owners to qualify for a home loan without the headache. If you're a business owner or self-employed, you understand that sometimes banks just don't understand our complicated income structures and can make it a real headache to qualify for mortgage financing. But there's a better way. We specialize in home loans specifically for entrepreneurs, using your real income, not your after-tax deductible income, enabling you to qualify for a home loan much faster than traditional banks. If you're dreaming of buying a home, don't let traditional underwriting guidelines hold you back. When banks say no, Neo says yes. Click on the link in the description below to schedule your complimentary consultation now. You're reminding me from a conversation that I had with our friend Andrew Abernathy, who has a mentor that's a billionaire. And the billionaire called him out one side and said, Andrew, you're good at a lot of things, but you're not great at anything.
Sure.
You're great at single family homes.
Yep.
And I think that the fact that you have been laser focused, right? It's that old it's that old kind of analogy that if you take a magnifying glass and you hold it 24 inches from a piece of grass, nothing happens. You move it 6 inches from the grass and you start a fire, right?
Sure.
Like you've been able to focus and create a fire in your business. Let me ask you a couple of quick questions.
Yeah.
So you started flipping and you were monetizing that, and you're watching that business grow. You're creating a lot of cash, but you're realizing, man, it's a lot of work, right? I got to every month, next month, I got to go get a whole bunch more deals to get a next paycheck.
Yep.
I'm paying taxes on those. Were you able to 1031 all those, or you're paying a tax rate on all those, I'm guessing?
It's funny. I've never 1031 once in my life. And yes, I paid a lot. That's a great point too. The reason too is you're exactly right. You flip a deal and you're making 40 grand. You didn't really make 40 grand. You're
Right.
making, $24,000 after paying short-term capital gains. And there's no depreciation, by the way. The beautiful thing about holding is you get the long-term depreciation that, you can offset some of that income. Even today, candidly, I still pay a lot in taxes, but that's okay because again, I'm playing the long game. I have the marathon mentality of being bankable. If you walk in and you're offsetting all these taxes, number one, you're eventually going to have to recapture, or you're 1031ing, and then you're dictated by this whole tax imposition and strategy versus the freedom and luxury playing the long game. There's a certain point where all of a sudden you're like, I am free because I can buy anything that I want whenever I want. I can go to any bank and they're going to want to lend to me because I believe in, hey, you got to pay to play effectively in some capacity. So that's
Yeah.
just what I do.
And so how long did it take you then to move from that mentality of flip for income to hold for wealth? That was a couple of year progression for you?
Oh yeah, I mean it takes time because again, I was paying solely cash for these houses, so I couldn't buy that many. I had to continue a hybrid
Ah,
strategy of flipping, flipping, flipping. Maybe you flip four or five to then buy one, and then you flip, four or five to buy one. And then by the way, I used a lot of OPM in my business, so interesting lessons are, my cousins, if you will, they got greedy. They were high net worth individuals out of the Midwest. They started speculating in Florida. These guys probably had $100 million net worth, and they pretty much imploded because they took that building $5 and $10 million spec houses in Florida at a very bad time and put themselves in a bad position. So it's like you have to be very strategic. Right now in the beginning of my career, I'd want 30-40% returns. Now I'm happy with 8 to 10. So it's interesting how the shift occurs once you accumulate wealth and playing that long-term strategy. I don't need to swing for home runs because if you're swinging for a home run, you're incurring a lot of risk. So it's very calculated and conservative in what I do. I always look at what's the downside risk versus the upside potential of any deal. That's why I'm not speculating about, building 10 spec $10 million houses. I have one going right now that's to diversify from my portfolio. We'll see how that goes. But again, I can afford to do it today. It's taken 20 plus years to be able to do that and sleep at night. The litmus test is too, in terms of leverages, you never want to be over leveraged. If you're tossing and turning at night, wondering how are you going to pay and service something, you've gone too far, or you have the wrong capital partners to sustain what you're trying to achieve in your portfolio, right? It's really important to match the capital, whether it's short term or long term, with the asset and prepare for contingency planning. If the music stops, you better prepare for a different dance, a different music song.
that's right. More leverage, more risk. So let's talk about that a little bit. You mentioned that you had I think you said some cousins that were providing private money for you. Is that right? Early in
Yeah,
the
we did joint venture. So it wasn't just a fixed return. It was an equity split. So we did a 50-50 model. People ask me all the time, what's the model? What's this? People are crazy. They think, oh, you're getting 70 and they're getting 30, or you're getting 80 and 20. Why are you giving so much equity? Well, when someone has pretty much, I don't want to say no one has unlimited capital, but an abundance of capital where you're not worrying about how you're going to fund the next deal and you're getting 50% of every deal. Think about this. Every two deals you do, without any capital exposure, without any capital cost, by the way, that's an incredible business model.
a good
So
deal.
the way that I structure this and why I was the ability to do so many deals was because I structured in a way that it was a 50-50 model. I took no management fees, nothing up front. I think all that's a bunch of BS. And these guys running their funds, they're just eating all the profitability on the front end. There's no incentive for them to sell. They're getting management fees. I call that horseshit. I want to provide real value for my investors. And how do you do that? Through execution and buying good deals and being diligent. I've never lost a penny for any investor in my career. I pride myself on that. So you're buying deep, you're doing, creating good economies of scale on the remodel, vertical integration by having my license. I don't have to outsource paying some other agents. So everything internally, I'm controlling all the fees. I'm controlling the whole process from acquisition to rehab to disposition. We made a lot of money. You take 50% of, 10% on three or $400,000. And during the time where the hedge funds came in, which was super exciting because we were buying a lot of houses, and we could have 20, 30, 40 going at a time that were already pre-sold. So you can only imagine the amount of money that the investors made during that. And I was taking all that money to then buy my own deals while continuous, that's the hybrid model, using OPM on the flips, taking my profitability to stabilize my new acquisitions. I call them Zak acquisitions, my name and the acquisitions, and then not selling those, right? Renting them out. So now I'm eating it two different meals every day because I got my long-term dinner and I got my dessert with the rentals, and it works really well because you talk about in flipping, you're only as good as your last flip. The rentals, I'm sleeping and I'm going to the gym, you're wake surfing and skiing, making money because now your money is working for you.
Yeah.
Flips and commissions, you have to, it's your human capital, it's your time. So all you're doing is focusing on the next paycheck versus stabilizing assets that create that passive, that annuity of income so you could do what you want when you want. That's the beauty of this business.
And I'm sure as you were building your flip team, that played in really well to your long-term strategy because you still got to buy well, you still got to renovate at cost, you still got to make that property cash flow. So the knowledge that you had accrued or learned through the flipping stage played right into that long-term strategy. Like it was just hand in glove, those two strategies.
It's exactly the same. The things people say, well, on a flip versus a hold, are you doing things differently? And the reality is, you want to have good branding in the marketplace. You want to have a great product. You want to have high rate of retention for your agents and from your buyers too, because the people buy from you, it's your image. They go do a home inspection, the inspector's like, wow, that's a really good home. That's what you're striving for. Not like, wow, this home has 800 things that you tried to cover up and put band-aids on. My mentality and how I'm different than most too is I spend the money to make the money. There are no shortcuts. I do full surgery. And so by doing that, whether I'm flipping because I want to provide a really good product in the marketplace to sell faster, to have that emotional and physical appeal to clients and or prospective tenants is the same thing. So when I'm renting, I'm going to get a higher caliber tenant that respects the workmanship. And also by default, people don't realize, and how can I manage all these myself? If you do a really good job on the remodel, you have good comprehensive crews and remodeling, you're not going to get as many management calls in terms of
That's
poor
right.
workmanship, right? They're happy with the product. I'm replacing things so things are new. There's warranties, so a lot less headaches for tenants to say, Zach, I've had 9 maintenance calls this month. Shit, I think an average home maybe has one, maybe two max maintenance calls a year, and that may be tenant caused. Their kid flushes a toy down the drain, which would be their
Right.
responsibility. We come out, service it, and back bill them. But the large majority of the calls would be a shitty, AC unit that you're replacing a compressor. I don't do that. I put a brand new AC or I put a new roof. I'm not getting the roof leaks and that stuff. So provide a good quality product that will pay massive dividends. Then continuously putting on band-aids will cost you a lot more money in the long run.
Couldn't agree with you more. Let's talk a little bit about, so if you started in 2002, you had yourself a good, whatever, 4 year run before, 5 year run before the
Yeah.
recession came. How did you navigate through that time? Because Arizona was one of those markets that definitely took a hit. How did
Yeah.
you make it through that period of time? How did you scale back or insulate yourself from losing properties during that time?
So the good news is, remember early on during the 2002 to 7 and 8, we were flipping. So we weren't holding a lot of stuff, which became very advantageous. The reality is hindsight, if we were holding stuff and you would have just stayed the course, the rents would have supported the purchase prices. You would have been just fine. Again, people act on emotion and not on factual data. So we call that time the irrational exuberance. When my hairstylist owned 10 homes on the same street making 40 grand a year, doesn't make sense, right? That they're getting loans based on heartbeats, but not financial, abilities for, repayments of debt. So how do we manage? Well, by being in the forefront and working on every day, every time I would list properties, you get a feel for the market. I had 10 offers. So all of a sudden you got no offers and no calls. You're wondering, kind of like in this market right now, you put a beautiful product in the market and it sits, you're like, is this listed? Did it not get active? You're wondering what's going on. Well, that's a pretty good litmus test when you're on the front lines every day to feel it. If you're outsourcing everything and relying on third-party data, you're going to be a little late to the dance floor. So we recognize the market's starting to slow. So we slowed our acquisitions, lowered our advertising. Remember, with OPM, and having the right capital partners, there wasn't all these big debts. So I didn't get hurt during that time. Sure, got hurt, maybe the last, couple houses sold at a break even or make, 2% or 1%, which is still a win because we aggregate a lot of profitability, through those 5, 6, 7 years. So then the question is, so what happens in a market that's kind of tumbling, which is the real question. And the key is, your health is your wealth. And I recognize a lot of the times when things slow down, you can't fight a down market. Warren Buffett says, when people are greedy, be fearful. When people are fearful, be greedy. I took that time to restabilize, recenter. Were you an Ironman? You seem like you have a athletic background or something.
No, never Ironman. I did 29029, which is Jesse Itzler's
Oh yeah.
Everest event. That was
Yeah,
fun. And
yeah.
we've done a bunch of other fun stuff like that, but
My
never an Ironman.
buddy Pre, who met Jesse, picked him up in Arizona. He did that thing too. You're running up and down the mountain or something a zillion times.
It's like literally just try to kill yourself up and down the mountain as many times as you can. It's brutal.
Oh, okay. So what I did was I was doing Ironmans. I was working out 5, 6 hours a day, really just fine tuning
Great.
my health, watching the market, staying in touch. But what I didn't do was out of sight, out of mind. I was still trying to create that top of mind mentality, which you want to do in any organization. Calling the short sale agents, calling the banks, staying on top of people, asking questions. Hey, what are you seeing out there? What's moving? What's selling? Why isn't it selling? So even though, yes, I was going to the gym every day and staying calm and centered, a couple of things financially that I did was, hey, I never got ahead of myself. Even when I made money, I never spent it on lavish, stupid things. To each his own. God bless America. I know life is short and people take different approaches. But I rented out my house that I built in DC Ranch to a Coyotes hockey player. I moved in my parents' second bedroom. I talk about going on dates with people. I'm going back to like a 55 plus retirement community, and they're like, "What are you doing here?" I said, "I'm living here." Like, I don't care. You want to judge me? You don't want to be with me because I'm making the appropriate financial decisions for my future. Then guess what? You're not going to be my right companion or partner. So I don't care. Some people are caught up in keeping their Mercedes Benz and the payments and all this flash, and they don't have the cash. I was in preservation mode because I'm ready to capitalize on an opportunity. Judge me all you want, driving around my used Prius and all my stuff. I could care less. I'm laughing all the way to the bank because all that money that I saved could then acquire homes in Maryville for $30,000 or $40,000. The money that I'm saving by renting out my houses and getting rid of stuff that doesn't serve me, that's a waste of capital. So again, I could capitalize on amazing what we call discount opportunities. Everything was on sale. It's like taking your favorite suit or hat and it's on wholesale at 30%. Well, welcome to the 2009 markets. When you finally realize that I was trading these same houses that went up to, let's call it 200,000, and I could buy them today for 25, that's an amazing discount, right? It's 15%, 10%, from the retail value what it was before. It's incredible. So that's during that time I went around letting people know, hey guys, this is what I've done for the past 5 years. I'm intimately connected to this entire market. I know everybody in town. What I'm doing now is raising private capital so we can capitalize when this thing hits bottom and it's heading that way. We're going to be the first ones in to leverage these existing relationships and make a lot of money. And so I was putting together my pitch decks, my distress asset fund, traveled during that time to stay on top of high net worth accredited individuals, letting people know what I'm going to do, how I'm going to do it, and being proactive versus reactive. That's the key to this business, you know? So everyone else is sitting there worried the market's real estate's never going to zero. But man, we got pretty close, you know, in 2009. And that's when I made my most money because I was buying those homes for 30 and then selling them for 100 and 150. And then the market again, I own a lot of those homes today. They're worth 400,000. Then my basis is 50 grand after remodel. That's crazy. But how did you do that? Because of delayed gratification, capitalizing on discounted opportunities. But the numbers made sense, right? If you're buying a home for $30,000 and it's renting for $1,000 a month, now there's no rents now for $1,000 a month, but at the time, think about your cash on cash return. It's massive, you know,
Massive.
25%. People would love to get 25% returns. No one's getting that. So that's the beauty of this business. It makes sense on both angles. One, on a cash on cash return to hold it. And two, if you were to flip it, you're now creating equity again. You can't, I mean, the cost of land was more than that.
I love in that time of great fear, you kind of just zoomed out and you're like, I'm going to take care of myself. I'm going to do an Ironman. I'm going to work on my pitch deck. I'm going to go find
Yep.
investors. I'm going to time the bottom of this market. You know, you're just, I think a lot of people, when things get crazy, they try to fix everything at the same time when they just need to narrow their focus, get through today, take care of their mental state, play the long game, make it to the
Yep.
next day. Everybody else drops out and you're
For
the
sure.
last man standing and you've been preparing for the market to shift. So I think there's a ton of wisdom in that. I'll tell you, I think one of the things that I regret the most in my real estate career was we had about 62, 68 single family rentals coming into the Great Recession. The Great Recession hit Utah later than it hit California and Arizona. Like we started to see the crash in prices in like 2010 here. So everybody else was like on the way back up. And we were like, oh, you know, thank God for the Mormons. They've saved us all. We're not going to have a real estate crash here. Well, they
Right.
saved us a couple of years, but you know, we had to pay the piper. And I was so fearful, Zach, to be honest, man. Like I thought I was going to lose all those properties. I thought I was going to be bankrupt, foreclosed, divorced, all the things. And when I came out of that, I was in life preserver mode, just trying to, you know, just thankful I had survived all the way until about 2016. I didn't buy a house or buy an investment for like 4 or 5 years. It was the worst decision of my life because, as you said, that was the greatest time to buy, and I missed it. And I feel I have so much regret about that, but also I'm glad I learned the lesson because next time I'm gonna operate differently.
Hmm. I mean, look, it's impossible, you know, who's the guy? What's it? I'm trying to think. Peter Lynch says you can't always buy at the bottom and sell at the top as long as you get a good chunk in the middle. And you could still do that today. That's the beauty of real estate. You know, it's time in the market, not timing the market. And so even to people are like, I missed it. I can't buy any real estate. Well, I bought 3 houses yesterday, candidly, right? The market, there's still an abundance of opportunities today when prices are 10 times greater. You just need to understand the equity play, how to buy deep, how to really have good economies of scale, leveraging these relationships, being so in tune with your local market that you know, we're the ones trading these opportunities. I know how much something's worth. The house that I bought yesterday, one of them, I have a house 5 houses down the street. As soon as the wholesaler called me, he's like, I got this house. First, I thought it was my house. It was on Hilton and 64th. I own 63rd in Hilton. So I was like, are you trying to sell me my own house? I quickly look it up. Oh no, this one's literally a few away. Same floor plan, same everything. And it happened that I bought a home 3 years ago, my other Hilton at 315, and I'm buying this one at 290. And think about the pricing today. So like immediately, yes. I don't even need to, you know, I made the
Yeah.
decisions in 3 seconds. So if you're so intimately familiar and tuned into the market that you can make a decision in a minute or two because you know everything that's going on, we're the market makers, not the market reactors, then you know speed is the name of the game and diligence and information is your friend, you know, by being on those front lines. Going back to again recognizing when the market was shifting to contingency plan. When you're in the market every day and you're operating, you're the first guy in, effectively you're the first guy out because the knowledge and that intuition is already right here. Trust that.
So you're now teaching real estate investors how you did what you did. And I recommend everybody check out fliplift.investorlift.com. We'll put a link to the site. But let me teach me a little bit how you teach first time investors. So I'm a wannabe investor. I've got a little bit of capital and I want to follow the Zak Kepes model. Where do
Mhm.
you go find a deal? And how do you get started if you're a brand new investor today, Zach?
Great question. I mean, finding deals, the first part is making the ask, you know. You got to project out there and manifest and leverage your social media, showing up and I'm a body to body, I'm an energy guy. So I would go to your local investment meetups, you know, for Arizona, it's the AZ RIAs. There's a million in every
Yep.
market. Go get acclimated and familiar with the people that are doing this stuff and ask questions and walk around telling them, hey, I'm Josh. I'm a beginning investor. I got some cash. I'm looking to do my first deal. I always recommend people on their first deal to, you know, not get ahead of their britches, right? You're not going to go skiing for the first time and jump on a double black diamond. You're going to go down a green or a blue and kind of feel
Yep.
your way. First, you should watch some ski videos. And then you should go on the mountain, get on the chairlift, probably get an instructor, and go down an easy green or blue to start getting a feel. Same thing in real estate. Start with a very entry level deal. Going back to fundamentals, I care more about downside risk than upside potential. You worked really hard to create that $100,000 liquidity that you're looking to invest. The last thing I want you to do is get some hard money, buy $1 million deal, and potentially lose all that. So I would say find an asset class that is very affordable, lower income, under probably 300,000 or 400,000 max. That's a cosmetic flip. Do something that possibly you could even come in there and paint it yourself, or do the flooring, or it's like a sweat equity type project where you are leveraging your capital and your sweat equity to do a quick move to flip, or it may make sense for a rental based on the equity. So my key components I teach people are there's four pillars to the investments. Number one, is this an asset? Is this a legacy property? Meaning, if you buy this home and for whatever reason it doesn't sell, because I'm a contingency person, I'm always planning for the worst case scenario, and you end up owning that house for 30 years, would you be happy to own it? If the answer is no, don't buy the deal, right? If it's not going to be a legacy property that you're happy to own forever, forget about it. Number two, what's your cash on cash return if you don't sell it? So if you stabilize it, you bought it for 300, it rents for 2,500, there's a 10% gross cash on cash return. That's pretty good for my, parameters. I would say, okay, that's number two. Number three, what is the equity after stabilization? So after you buy that house for 300, maybe you put in $10,000 in materials, it's a simple cosmetic flips, you're into it for 310. Is it worth 400? And if it is, what's your equity spread on there? You've got 25, 30% gross equity. Amazing. If it doesn't have 15 to 20% stabilized equity after you acquire it and spend the money to stabilize it, no deal. Because again, that's why would you buy a deal with no equity? Anyone can go on the MLS and buy anything. Buying a deal isn't necessarily buying a deal. You want to buy a steal that becomes a deal. So you really want to focus on that equity portion. And you ask yourself that simple question. If I buy this deal today, does my net worth go up? Does it stay the same or does it go down? Clearly, if your net worth stays the same or it goes down, what are you doing? Why would you buy that deal? So it's so dumb to me. Equity is your best friend. That's the number one way of building, your wealth and stabilizing that. And then lastly, and the fourth pillar is, can you buy this less than replacement cost? Meaning, do you have a builder in town that could buy the land for $40,000, build a house for 150, you're into a call for 200,000. If you could build it for 200, why are you paying 300 today for that same asset class? Conversely, if it costs that builder to build it for 300 and you could buy it for 200 today, now you got something there. People forget about replacement costs and ability to create opportunities through value add or construction. So it's an interesting, plan, but it works. If you're looking at those four factors and it's a yes on all of those, it's an automatic green light. So that's exactly what I would do. In addition, a lot of people don't have all the cash to buy something. So you're talking about an early investor. You probably worked a job, maybe it's a W-9, maybe you got your own other company. Are you bankable? I would start looking at banking relationships because capital is just as important as the asset. So you can't have one without the other. You can have an amazing deal and no capital. You can have a lot of capital and no deal. We'll make the assumption you have most of the capital and you don't really have a deal. You want to be communicating with bankers to understand how much can you qualify for today? What are the rates? And look at multiple options for financing. Because the last thing you want to do is find that great first cosmetic deal, the affordable deal, and then you don't have the capital to take it down. And then you're stuck because you always want to execute. You want to be a guarantee in what you're doing. So figure out what is your barrier to entry effectively. If it's the connections for the deal, build those connections, show up, announce on your Instagram, your Facebook, your friends and family, put it out there. Nothing happens without projection. Hey, I'm Josh. I'm looking for my first deal. I want a 3-2 in this area. Maybe I'll hold it. Maybe I'll flip it. A cosmetic only. So if you or anyone you know has it, please send it my way. I move very quickly. I love the opportunity to work with you. You keep the commission. I want everybody to win on my transactions. Reach out to me. I'm ready to go. It's as simple as that. People overcomplicate all that, but putting out those reps and projecting it and keeping it simple. Once you overcomplicate things, people don't even understand. If you walk up to a meetup group and you're like, I'm looking for my first investment deal. I'd like a 20 cap. I want to spend $40,000. And, they're like, whoa, slow down. Just keep it simple, stupid. I'm looking for a single family home, cosmetic, no structural, no solar, ideally no pool, very simple deal. If you come across that, I'd love to be your buyer. Period. The end. Stop complicating it.
Go to the local RIAs, which is the real estate associations, investors associations. Put it out on your social. Call the local. You can go on ChatGPT and say, who are the realtors in my area who specialize in investment single family? They'll give you a list of them. Call those people, introduce themselves, keep it super simple. Stupid simple. I can talk, trust me. How else do you find deals in this market besides those things, those hints that you've given?
Again, social media, putting it out there, following other people and calling people that are doing exactly what you're doing. Sometimes people have, and I get them all the time. If I'm buying, let's say, 15 deals in a month and I only want to digest 10, what happens to those other 5? If somebody called me and said, hey, Zach, it's Josh. I see you buy a lot of deals. If you ever have an overabundance of deals that month and you want to wholesale or move a couple, I'd love to be on your list. Call those people. I would drive the neighborhoods that you're targeting and look for distressed, overgrown landscaping, very fundamental signs. You could do driving for dollars virtually, but again, I'm the person, get in your car, drive the neighborhoods that you're looking at buying. There's going to be an open house. Walk in the open house. Introduce yourself to that agent. The people that are working it are the people that are going to bring you the deals organically. And don't be afraid to put in the work. Create a little, write on a piece of paper or an envelope. Hey, I'm Josh. I drove by the house. If you're ever interested in selling, I'm looking at buying a home in this neighborhood. I'm a direct buyer. This is not a solicitation for a listing. I truly want to buy this home for cash. Give me a call. You'll be surprised. You put 100 notes on strategic homes, you'll get a deal. There's no question. You got to put in the work. It doesn't happen through osmosis. You got to take the steps and do it. So there's so many different ways of doing it, but there's a bunch of fundamental ones that you have the money, you're out there consistently marketing and projecting and asking for opportunities, they will come your way. Remember, you want to have that top of mind mentality. Out of sight, out of mind. If nobody knows that you want to buy a deal, no one's going to send you a deal. If you're out there every day, even if you're looking at what I call the simulation process, go into the neighborhoods that you want to buy something and walk through that open house and film yourself. Hey, it's Zach. I'm in this open house checking this neighborhood. Great little neighborhood. These rent for $2,400. This is a perfect deal of what I'd like to buy. If anyone has something like this, reach out to me. So you're leveraging someone else's flip. People see you out there doing something, and you do that enough consistently. It's a domino effect of interaction. People are going to say, Zach, I see you constantly every weekend at open houses. Why do you keep doing this? Oh, well, thanks for asking. Because I'm looking for my first deal. I'm really getting the lay of the land. I've got this thing down to a science now. I know that I can buy these for 200. They rent for 2,500. They sell for 300,000. So I'm really looking to find my first deal and incrementally scale. I'm going to start with one. I'm not greedy, and I'm going to do a proof of concept. And then I'm going to do 2. And then I'm going to do 3. One house, one relationship, one projection, and ask at a time.
I love it, man. I love it. Let's move a little bit into mindset and maybe mindset and mistakes, brother.
Yeah.
I think every investor that's done his 4,000 transactions like you, there's not a lot of them out there, but anybody who's been in the game for a long time, we've made some stupid mistakes over the years. We have some battle scars. So
Yeah.
tell us about a deal that you maybe learned the most from by stepping in a bear trap. And how do you think about those, even though you have a process to eliminate as many downside risks as possible, how do you get through those difficult times when you do make a mistake and move on?
Incredible. I've done a lot of these calls and spoken on stages and all that stuff. That is an amazing question. I think very critical. One, I think it's so important, and you'll be familiar with this, to be in the flow state. So to be in the flow state where it's like you wake up in the morning and you feel good and you're creating a positive energy. So many times people want to bring you down. They see your successes. People are sending negative stuff to you. Tenants are calling you, and AC blew up. All these things can derail your day and your flow state. But if you're in the flow state and you're feeling positive, for me, I get in the flow state through working out, walking my dogs. You're probably surfing or skiing. We're creating this positive, this magnetic energy. And it's kind of a barrier for someone to penetrate your epidermis of positivity. You got negative people coming at you. You also have positive people. I'm going to, in my flow state, deflect negativity, deflect all this downside. I will communicate to it, but I'm not going to let it fully penetrate me. So I always try and stay in my energetic field in that flow state of positivity. I'm going to attract and feel, I swear, I manifest good deals, good opportunities, sales. I envision it selling at a retail level, finding good tenants that are going to take care of it. And when that negativity comes at me, when I'm in my flow state, I'm always calm in my energy. I'm never going to let them get me riled up. I'm not going to add fuel to my fire. I'm going to de-escalate. I am a problem solver, not a problem creator. So when tenants are mad and they move in a house and there's a roach running around the house, they're screaming at me, Zach, you're a slumlord, blah, blah, blah. No problem. Hey, I'm so sorry that you're dealing with that. All I can do is control my response, which is I'm going to get a pest control company out there. I'll bring my maintenance team. I'm going to be out there right away. I'm sorry for the inconvenience. It happened last week and somebody moved in. A couple months ago, they moved in. There was probably not a roach problem. They probably brought him in the house. The house got overwhelmed because they tried treating it themselves, didn't communicate to me. They're like, we need to move out of here. Keep the furniture. This is ridiculous. Not so fast. I got him at Airbnb. I brought in my pest control, stabilized the problem in a couple days, checked in on them, showed them that I cared. I didn't let them say, oh, get out of the house. I can't believe you did this. It was truly their fault, and that's okay. But I didn't blame them. I said, no worries. I'm going to make this right because I understand the big picture of if I lose that tenant and they move out and I'm spending $1,000 for a trash out, I need to pay another leasing commission. It's going to take another month or two to lease the house. When for maybe $2,000, I solved the problem. It could have cost me 10. So don't let that, ruin your day. That's just a small example. Creating that positive energy so that people can feel the energy on your deal flow, right? You're answering the phone. You're like, yeah, hello, this is Josh. Or, hey, it's Josh. Good morning. I just surfed. You want to be cognizant of what you're projecting in your energetic exchanges. People feel it on the phone. They feel it more in person in your interactions. So I'm very consultative in everything that I do, bringing my best energy to the situation always. So that's my flow state and mindset. Bad deal was, and this is a very good lesson for people in real estate. Those same cousins that got greedy, if you will, in Florida, I reinvested a lot of money with them. They were doing a lot of seller financing and notes, and I gave them 7 figures of my profits during those 5 years to invest. And their cousins were sending back and forth millions of dollars days for deals. I trust them. That's great. What didn't I do when I sent them that $1 million? I didn't get a formalized agreement because we were sending money back and forth. When they got over levered and my dividends on that fund that I invested in stopped coming, what we call that mailbox money, and I called them, I said, hey, what's going on? Oh, we're getting things worked out. No need to worry. And the next month, no mailbox money. And the next month, no mailbox money. Well, at the time, I'm 20 some years old and I had $1 million that I invested in something. It's called statute of frauds. Whatever deal that you do, you get it in writing with clear breakdown of roles, responsibilities, time frames, receipts. I have all my wires going out. I got a K1, but what we didn't have is some operating agreement. When is that loan due? What happens if there's a default? How is that money protected? How is it collateralized? So it's so critical in real estate is to protecting investors' money, your money, delineating everything. So it's very black and white. Room for no, ambiguity in any deals. You want to be very precise, consistent, have an attorney draft operating agreements, memorandums. What are you doing? So good news, bad news. The bad news is I end up losing all that money. I lost the 7 figures. And you say, oh shit. But that was the greatest thing that possibly could have ever happened to me. You want to know why? Because I believe when one door closes or one bad relationship or one bad deal, you learn from that. And if you're an idiot and you don't take that lesson to move it forward, then that's really your loss, not the capital. The gain was, remember, now I went out, I lost that money. Now I'm sitting in front of high net worth individuals, some of them worth north of hundreds of millions of dollars. And I told them my story and I said, hey, I was sitting in your seat. I invested. What didn't I do? And they're like, I don't know. I said, statute of frauds. I didn't have a good operating agreement. We didn't have a good joint venture partnership. We didn't have capital calls. We didn't have all these things in place. The good news is when you invest in me, because I was on your shoes, I turned it around. I'm 100% going to protect your money. Here's the protocols and things that I'm doing to ensure that you're always protected. I even said, hey, no one lives forever. If I get hit by a car, I mean, no one talks about it. They don't want to talk about this shit. But if I die, how is your money protected? Are you going to have a life insurance policy on me? You're going to be in a first deed of trust on the asset. Your money doesn't flow through my account. It goes direct to title. So I put all these contingencies and everything in place to make sure people were comfortable. 90% of the people that I interfaced with, of course, they saw what I was doing. I was successful. They invested, but that was the icing on the cake to show vulnerability, right? To take that massive loss of $1 million to then leverage that to make people comfortable investing because I understood what it's like to sit on the other side and potentially lose a seven-figure investment and ensure that that wouldn't happen to you.
Yeah, it was $1 million education, not $1 million loss.
Correct. Yeah.
Do you know who Keith Cunningham is, just by chance?
No.
So I was at an event with him when I was a part of Genius Network, and he is the rich dad and rich dad poor dad that Kiyosaki writes about.
Yeah.
And I sit down next to this guy and have lunch with him. I don't know who the hell he is, right? He's just
Sure.
a new guy in the group. I'm thinking. I start having a lunch with him. He starts telling stories. I'm like, who the hell are you? And one of the stories he told me was that he lost $100 million in his 30s and 40s. And he was telling me how grateful he was. He said, some people pay $1 million to go to Stanford to get a medical degree or something like that. He's like, my degree happened to cost $100 million. And guess what? I've made it 10 times over. And I never would have made it had I not lost the 100 million. And I'm just like, wow, what an amazing disposition. But it's the same thing that you just said. You turn that loss, that painful lesson, it's the obstacle is the way, right? That
Yeah.
obstacle becomes the way for you to get to that next level. And you just needed to figure out how to get to that next level.
The other critical lesson that was extrapolated from that massive monetary loss was the mindset, right? I could have sat there every day and woken up and been upset and fucking
Yeah,
put my head down and went into depression. But no, it was like, that was yesterday. I can't control that. I can only control what I can control. I'm not going to let negative emotions in this massive monetary loss carry and permeate through my day. I'm going to go out there and get that back, like he says, 10, 100 fold, because otherwise, it doesn't serve me. That's a negative.
that's
I
right.
don't want. I want to be in my flow state. So I want to work out, digest. I feel it. I realize it. I'm releasing it, and I'm only going to focus on positivity. The other thing that's critical is looking at the people around you. I'm going to shout out my buddy Isaac Scheibel. So it's important to surround yourself with good people that want to elevate you and they want to see you win and they want to, maybe even invest in you. But during that downturn, I lost the $1 million and the market's imploding. And there's days where, candidly and vulnerably, I'm like, what am I going to do? Like you say, people want to, naturally, you just want to run away. You're like, fuck, oh my God. Like you lost all that money and you're thinking about your marriage and you're thinking about all these things and it's tough. Because if you surround yourself with quality people, they're going to encourage you and see the best in you. When you're in the forest, you don't always see the trees. When you
That's
have good
right.
friends and they say, hey, I'm up here in the helicopter, I see you down there, I'm coming to rescue you. Are they your friends in your circle that you're surrounding yourself in the depths of these hardships? Are they the ones that are going to pull you up in a helicopter, come look for you, rescue you, and get you back on the way and give you water? Shout out to him for the days where I'm like, man, this is really tough. And he goes, brother, you're the best at what you do. There's no way you're not going to continue doing that. And so I'm grateful for that. And without, again, you need those people in your life. I'm not going to give myself the credit. I'm going to give the people that believed in me, the investors, the Isaacs, and, my family. They're like, stay the course, right? Stay the course. Just like in an Ironman or any event, you don't always feel good the whole
Right.
time. There's many times where you contemplate, man, I'm overheated. My leg is cramped. I got 4 blisters. I'm bloody. Maybe I'll do the next one. Of course, that goes through your head, but the reward is through that journey, persevering through those hardships. And if you didn't have those people out there clapping for you and pushing you, and you were out there by yourself, the chance of you quitting are much greater. So make sure that you are surrounding yourself or allowing those people that want to support you to give them that opportunity to listen and embrace their advice and carry you through.
Make it to the next aid station and then get your ass out of the
Exactly.
chair and make it to the next aid station.
Bingo, right? Don't think about, oh, I'm getting to this finish line. That's exactly right. Small steps. You're not like, hey, tomorrow I'm going to go buy 300 homes. Let's start with one relationship. Let's figure out meeting a couple bankers. Those are your aid stations, right? Let me
Yeah.
project. Let me put one, small video and ask if this is what I want. And then tomorrow I'm going to go meet banks and I'm going to go meet some more banks. And if you're just using that exactly, those aid station as the crutches, you're going to be great. Eventually you're going to get there.
I want to end on an inside game question, bro. it is very apparent to me that you have a process and you put a lot of energy and a lot of intentionality into your inside game, the narrative that goes through Zak Kepes' head. And this is going to be kind of a weird question, so I hope it lands. I spend a lot of time in meditation. And in meditation, one of the downloads that I have as an entrepreneur, my job is to bring order to chaos. The world is chaotic and it's full of problems. And my job as an entrepreneur and as a leader is to calm all that shit down and to bring organization and a path forward through the chaos. Joe Dispenza talks a lot about the quantum field and how if you think about some place that's bombed by an atom bomb or a fire comes through and the quantum field replaces that with greenery and brings back animals and brings order and life to chaos. And I feel like that's our like real almost religious or spiritual ability as true operating beings. And I'm just curious, like, how do you think of your role and your impact from a spiritual standpoint? And how do you have that? What drives that strength and mentality that I can feel so strong in you?
Again, going back to this whole notion of this flow state, right? If we get into this chaotic space, we can't think clearly. So
Yeah.
again, number one, being very healthy and stable minded in what we're doing, because we're making major decisions. We're impacting a lot of every financial decision that I make, there's a huge domino impact of it's not like, oh, I just bought a house today. What transpires when I buy this house? I buy the house, I help that seller, they transition so their life gets more calm, solving their problem. Then my contractors come in, and that money feeds that contractor and their families. And then maybe another family of renters comes in there, provides a new opportunity for them. So these decisions have massive impact to a huge food chain, if you will. My biggest thing is I think, our checkbook is a very powerful tool, but not as powerful as our words and our
Mm.
energy. So for me, words are everything. And so many people overlook, they just think, oh, it's just money and you're moving money. No, moving energy, and I'm giving autonomy to people. I think about my handyman and his family and where he came from and how I met him. He was at Motel 6, and Sarah, I believe things happen serendipitously in life because of karma. If you do good to others, when no one, I'm the same guy that you see me on a commercial or an Instagram, you met me in person. Be your authentic, true self. Stop trying to be like all these other gurus and these idiots. These gurus don't even do the business. Just be a good freaking person, number one. So just think about my interactions with people as if my tenant calls me, if this was my mother call me, I'm going to treat her the same way, right? If I'm buying a
Mm.
house from someone, if that was your mother, would you rip her off like that, or would you give her the best possible deal and give her multiple options? So I'm about that energetic exchange, having that familial consultative dynamic, and giving people autonomy. When I met this handyman, he had a shitty job and he was depressed. I met him. I gave him an opportunity. He treated my tenants extremely well. Immediately invited him to my house, sit him down. I said, "What do you want in life? What are you looking for?" And he's like, "Man, my manager didn't. He paid me. They paid me just fine, but he never appreciated anything that I did." And so understanding how people's clocks ticks, everybody's different, right? It's like the five love languages. So if you listen to people, they're automatically going to start telling you what they want, what they need, how they thrive. So my strong suit is, if you will, is listening to people and giving them feel elevated based on what they need consultatively. I'm learning every day, right? We're all learning. I don't think I know everything. I'm great at what I do, but I can always be better. There's no complacency because I'm learning from other, even beginners come up with some cool concept. That's why I listen more than I speak, ideally every day. So how do you achieve that? Based on, again, consultatively listening to your employees. I give these guys autonomy. After a week or two with Daniel, for example, I said, "Man, you're the greatest. I love you." He's like, "My boss never told me he even appreciated me." It's like, it's so powerful with a simple two sentence or sitting down with someone, looking them in the eye, give them words of affirmation and energy and autonomy, how powerful that is. Sure, he appreciates the really good paycheck, but I guarantee he appreciates my appreciation for him and telling him how great they do. When I'm walking a project with contractors or I'm meeting tenants, I give them the ability to create and manifest their space. Who gives tenants the ability to walk in a home and say, "Hey, I noticed you got kids. Would you like artificial in the back turf so your son can play soccer?" They're like, "What do you mean?" I said, "Well, it looks like he's going to be a soccer player. Let's put some turf back there." Who does that? So it's listening, analyzing, implementing, and executing. That's it. Take the time to bring your greatest self to people to enhance their lives. If you're enhancing their lives and you're bringing real value, that will be reciprocated. If it's not, clearly it's not a good fit, but 9 times out of 10, it will be reciprocated. You're going to have a retention of tenants, happy people. They say happy wife, happy life, happy tenants, happy life as well. Or buyers, it's the same thing. My sister works for Yelp. She's one of the top 10 employees there. She's done very well, manages North America and whatnot. And when I think about my experiences with people, and I think that strong suit for simplicity is giving a 5-star experience, right? I'm not just going to give somebody a 5-star home. I want to know them. I meet all my tenants. I want to know your story. How did you end up here? What do you do for a living? How can I help your business? How can I help your family? When I meet them on the first interaction, we meet, we fill out the contract. Typically, it ends in an embrace of a hug. If you're treating somebody like an annuity of income, they're going to treat you the same. If you treat somebody like family, ideally they're going to reciprocate. By the end, when are you going to come by for dinner? What can I bring? Oh, I see you're a welder. Let me announce you on my Instagram. Anyone need a nice welder? Here's my tenant. Let's enhance each other's lives. Stop treating people like a paycheck and treat them like family. That's my strong suit. I think that makes a huge difference in this game.
Bro, this has been gold. Your story proves that you don't need to be flashy to build real lasting wealth. You need vision, you need relationships, you need consistency, play the long game.
Yeah.
This has been a lot of fun for me. If people want to follow up with you, where do they find you? How do you tell us a little bit about Flip Lift to close us out?
Sure. They can find me on my Instagram under Zachary Kepes or Zak Ventures, Zak Ventures. You'll see a picture of me and my dog right behind me right there. I think that's the same picture. Actually, that came from one of my students who hand painted that. If you look at that, it's beautiful.
Wow,
Hand painted.
that's killer.
So those are the greatest gifts. I love dogs and animals, my best friends, my boys. That's the inheritors of the Zak Ventures legacy
Oh,
properties.
those are some lucky dogs right there, brother.
They're great. And then the flip lift thing, which is great. It gives people really just everything that we talked about. I go in and talk about raising private capital, structuring deals, all of that. It's just an online course that you can watch at your leisure, you click through. I mean, I think it's maybe $100 or something a month. I don't charge these $10,000, $20,000 fees. And ultimately, if you're on my Instagram, you have a question, you're stuck on something, shoot me a DM. There's many times I just respond randomly like that, or be prepared because I'll probably FaceTime you. I like to look somebody in the eye. If you're going to spend the time to ask a very well thought out question, I'd love to spend the time to assist you and get you over that obstacle or hardship to the best of my ability. So yeah, love the opportunity.
You're a great human. Thanks for being with us. Can't wait to see you again in Arizona. And thanks for bringing all the gold to this podcast, bro.
Thanks for the opportunity. Good to see you're looking good, buddy.